Welcome back to the Jett Cloud podcast. By now, we should all have investment accounts or savings accounts opened. So, you should have already started saving. Or, if you've saved, you should be considering ways to invest, like the stock market. On an earlier episode, we discussed the fundamentals of buying stock. Today, we will discuss step by step basics of trading. I mentioned in the last episode that DoorDash recently skyrocketed, and I received a few messages from people saying they were not able to buy DoorDash. Well, it was all about timing. DoorDash was an in house, only selling privately in house to employees and workers. Then they changed to an IPO. IPO stands for Initial Public Offering. It's when a company starts going public. So they recently decided to trade to the public. And when an IPO is in the middle of a trade or when they're in the middle of preparing to go public, all buying is stopped at that time. You cannot buy when the IPO is trading. So, in that case, what you would do is, and I'll be using the Fidelity portal as my example. However, regardless to whom your investment company is, they all pretty much have the same layout. So, once you're logged into your portal, see your options bar. Fidelity's first option is Accounts and Trade. Click on that, then click Trade. Enter the stock symbol or the ticker symbol for the stock that you would like to buy or trade. And pretty much whether you're buying or selling, it's all a trade. Trading is the overall category of what we're doing. Now, choose your action. Choose the quantity of shares that you would like. Then you have to put in your order type as limit order. Keep in mind that when the stock is already public, you can buy at market order because it's already on the market. But when it's new and it's just coming to the market, you don't know what it's going to cost. So put the price that you think it'll open up and sell at. So set your order type to limit order. Then for limit price, put the price that you are willing to pay per share. This would also be the price that you think it's going to open up and sell at. And if it sells for less, then great. Or if it sells for more, either go back and change your order to pay more or walk away and just wait to see if the price will go down. Now, that explains your order type. Next is your time in force box. If you put your time in force as day, then for the order expiration box, you have to put the time. So at that specified time, your order will execute or cancel. Or for the time in force, you can choose to set your time in force as good till canceled. If you set your time in force as good till canceled, then your order will be good for that price until it's executed or canceled. And the system will automatically generate the expiration date and expiration time that it will cancel if it has not been executed. You can also set an expiration alert that will notify you when your order is about to expire if it has not been sold to you yet. IPOs have really been volatile lately. Some of these IPOs are just skyrocketing higher, and it can really be hard to strategize and know what price to put. So, the problem with IPOs is you just don't know what they're actually going to open up at. My best practice is a little while before they actually open up to the public and start trading. Pay close attention on that day. Pay close attention. you'll get indications based on little pieces of information from here and from there. So you have to kind of process this information and guess what price you think they're going to open up and start selling at or start trading at, as we like to say. So that's why you have to stay focused on stock market news so that you'll be in the loop of what's currently going on. And still, you just never really know. You'll see indicators that the IPOs are going to open up at a certain level, but then they start raising levels and start raising the prices, and then they start trading. And they can up the price based on supply and demand. Like, you may think it's going to open up at $120 a share, but then it opens up at $180 per share. It's all supply and demand. So put your limit order in at the worst possible price. So if it executed, you would be happy. So in the beginning, enter your stock symbol, choose your action, choose your quantity, then choose your order type, and choose your time and force. And remember, your time and force could be day. A day order is when, if your order does not execute during the day session only, your order will cancel out. So it has to execute that day before 4 o'clock Eastern Standard Time, or it will cancel out. So if you choose day, well, at the end of that particular day and at that specified time, your stock should trade or cancel. Or your time and force can be good till canceled. This is an open order, which is good for 180 days. This will allow your trade to stay active longer, giving it more time to get your price and execute or cancel. Also, keep in mind when you put in your price, if you put your order in for 10 shares, if your price was not high enough to pay for 10 shares and you could only afford 9 shares according to the price that they opened up on, well, it's definitely not going to choose to only do 9 shares on its own. So at that time, you can either go back and change your order or walk away. So keep in mind key pieces of information when it comes to IPOs and trading. Remember your options. Your options are to choose between market order and limit order, and choose between day or good until canceled. So if you're ready, very carefully get out there and start trading. Stay tuned to the next podcast episode as we continue on our journey to financial freedom. If you're on YouTube, like, comment, and subscribe, and turn on post notifications. And also, I'm available on all podcast platforms. I post every Monday night, and the links are in the description below. Until next time, stay invested. Welcome back to the Jett Cloud podcast. By now, we should all have